Hi everyone, this is Asa Bailey again for another in the series Invest and Recover. Investing takes time. Recovery takes time. I'm going to be quick today. I'm looking at your investment time horizon. Benjamin Franklin quotes, "Time is money. Waste it now, pay for it later." It is ideal to have both short-term and long-term goals in your financial plan. Say you approach me and state that you have $100,000 to invest. One of my first questions to you would be, what was the money originally intended for? And how long can you go without this money? How long do you want this money to be working for you? Truth is, sometimes you really have not stops to consider. You just know that you want to invest, and if it goes as expected, then you will continue for the longest possible while. So you cannot just get up and say you want to buy an asset and stay and say you want to forget about it indefinitely. It is not advisable to invest in a long-term bond, for example, and then just change your mind a few months later. This can result in unexpected loss, fees, so you have to set some specific parameters around your investment choice. Where you invest and for how long you invest should be decided based on your SMART investment goal. Your investment horizon plays an important role. It's an important factor to consider when identifying the right products or assets for your investment. So whether I will recommend, say, a stock which is higher risk or bonds which are less risky, we want to avoid an allocation that has some negative outcomes. If you say that you have needs for the fund for within a year or sooner, then investing in a money market fund or a short-term certificate of deposit would fit a short-term and conservative approach. You may be going short because you want to keep your options open for a better investment opportunity, or capitalize on an undervalued asset, or you heard about an upcoming initial public offering, IPO, that is highly anticipated. Your short-term goals may be that you want to save money to start an investment, you want to have an emergency fund, cover minor home repairs, or just pay down debt. This may take between 3 months to a year. That is regarded as a short-term goal. I know it's always possible that you intend to go long and then something just comes up and you have to draw on the money that you have invested. I caution you, you're going to end up with some exit fees or some charges. So good luck on finding an investment that does not have it. Later we will research on some investment that will be ideal for that. If you're planning towards, say, retirement or your child's education, then this is a long-term goal, and there's a strategy to meet that. Suppose your child's education, your child is about, say, for example, 10, and there's another 8 years for the child to go to college. Then, assuming a rate of, say, 9%, you invest $100,000 as your principal, putting $10,000 a month and investing it for 10 years. That will gross you about 1.3 million. That's on the assumption that the rate remains and you have not increased. But we usually recommend that you increase your contributions to your investment as your income increases over time. Another example, you want to buy a car in 2 years. You want to have $500,000 in 2 years. But right now you have only $100,000. And you're putting $10,000 a month for the next 24 months or 2 years. Calculating that on the 9%, I wish I had that feature where I could just put this on the screen. But we're getting there. Maybe one of you guys can suggest an app to assist me with that. But investing $100,000, $10,000 a month for 2 years, that would gross you about $340,000. So you'd still end up short of reaching that $500,000 that you want to realize in 2 years. The best bet is maybe increase that up to $15,000 a month, right? And calculating, yes, $15,000 a month invested for 2 years on 9% interest, where you started out with the original principal of $100,000. That would carry you to $460,000. So that is closer to the target. And using assumptions that, the rate that we're using is 9%. But you have to always remember that whatever rate is quoted, it doesn't guarantee that going forward those rates will pertain in the future. So investing for long term, that fits your retirement need, and this can go up to 10 years or beyond. Over the long term, I'd suggest that you consider investing in some stocks. This proves to give the best returns, and even though it carries a greater risk, there is usually time available to recover if there's a loss. On a matter of time, if you have a short-term and a long-term goal, then there should be something in between that. There should be some balance. Medium term, you may make a plan to purchase a home or that same dream car that you have in mind, but it takes some planning on getting there. I know that you're just anxious and you want to jump into the markets and try trading and share your experiences, and we will get there. On our next session, we'll be looking at determining your risk profile and making a judgment as to what approach you will take towards your investment. Will your approach be conservative, aggressive, or on the moderate side? Well, in the meantime, I just want you to start thinking about your short-term, medium, and long-term goals and how long you intend to reach those goals. Let us get a hold of your finances now. Time is burning out. Thanks for tuning in. Subscribe and share.